everyone. Welcome to the Credit Direct podcast, where we discuss finance, money, and everything in between. Today is such a beautiful day. I have a very amazing expert, because that's what I would first refer her as. She's an expert. When it comes to today's topic, she's a thought leader, and that's one reason why I'm excited to be here today. I'm happy to welcome us to the last series of our From Aspiration to Action series. And in today's episode, we'll be talking about mastering credit score and credit reports. And I'm sure that Amaka has quite a lot to say, but I would hand over to her to introduce herself so we can get to meet her better. Over to you.
Okay, hi. Thanks, Oyi, for the fantastic welcome. My name is Wabaka Uwaje. I'm the head of credit at Credit Direct. Thanks, and thanks for having me once again.
It's really good to have you here.
Thank
Once
you.
again, my name is Oyilola, and I hope we listen and take notes because today's session is really going to be amazing. So let's just get right into it. And I'm also going to say that the reason we are discussing this topic at such a time as this is because credit reports, credit score is something that's we've heard. It's actually even quite like a buzzword, but the truth of the matter is not everybody knows what it is. People would say, "Oh, I've heard of credit score," but then when you ask them what is credit score, or ask them how what is credit report all about, then you begin to hear people stuttering, trying to say, "Okay, it is three numbers or something." But today we need to really, break that down and have people like me and my viewers, of course, know what credit score is, credit reports, how to differentiate it, and how to build a good one at the end of the day. So we'll start with the first thing, which is quite obvious. What is a credit score? And I'd like you to tell us about it.
Okay, fantastic. Thanks, and I hope that I'm able to do justice to our topic today. And I hope that people would understand what we are discussing in details when I'm done.
Yeah.
I like to say God first, but again, let's just start. So, what's credit score? Credit score, I would say, is a numeric number. Some will tell you that it's a 3-digit number, and some will say it's a 4-digit number. Yes, if you say it is a number, yeah, it's fine to say it is a number because it sometimes becomes numeric. But a score is just a number that represents your financial history, your journey from the beginning of your loan cycle to from where you started to now, how you have behaved over a period of time. I would say that this course technically helps lenders, right, to know who you are as a financial person, to know whether you are financially responsible or not. So, for instance, some people would say it's between 300 to 850.
Okay.
Some will say it's between 0 to 1,000. It technically depends on the lenders. So the lenders are the ones that determine the score that, or the credit bureaus, they determine what they will want to put as your score based on certain parameters, right?
Okay.
So there are different parameters that comprises of what your score would be. But your score technically, right, represents you as a person, your financial history as a person, what you've been doing over a period of time with how you've taken loans, how you've borrowed loans in the past. That's what your score is about. So, but in simple terms, to just put it simply, your credit score tells them or tells you how you are likely to repay a loan, right, that you have borrowed. That's what credit score is about. And it has different parameters that you can use to measure it based on your credit history, how the loans you've taken in the past. It can be your payment history, it can be your outstanding debt, right? It can be the length of your credit history.
So these are like parameters, right?
Yes, it can be the types of credit that you have taken. So all these things are what we use to get to know what your score is. For instance, if you're taking a loan in the past and you did not pay well, that is part of what will determine your score. If you are taking a personal loan, asset loan, those are what will also determine your score. So your score comprises of all these things, all these parameters I have mentioned that will not give you a certain number, whether it is 350, 400, but it ranges, it's not static.
Oh, all right. Okay, so now that you mentioned that it's it's a range from 350 to 400, or sorry, 350 to 850. In my head, I'm wondering, I don't know my credit score, but I'm trying to wonder, let's assume that it's a 3-digit range for me. If let's assume I have a good credit score, would it be a 300 or would it be an 850?
Okay, so for us in Nigeria or for lenders, right, the higher your number is, the better you are.
Oh,
So if you have 850, you're a perfect customer. I will want you to come. And you know what 850 does for you, right? 850 will give you access to fast credit, right? Because sometimes some lenders, if you have 850, it shows that you've been paying back on time. It shows that you've been borrowing money and you've been paying back as you should pay back. It shows that you are credit worthy if you have 850. So if you have 850, you are good. If you have 700, sometimes some will say you are good, but not. So it depends on the lender's risk appetite or the company's risk appetite. So if you have 350, I'm sorry. Or if you have 300, I'm sorry. So the lower your score, the worse your case is. But the higher your score, the more we want to do business with you.
Okay, so yes, that's the first assignment. I need to increase my score. If it is not, I need to get to 850. So
First,
that
you need to check.
Oh yeah, that's the that's the first that's the first thing. Which then takes me to the next question. Although I know that you already hinted at why having a good credit score is important. You said it makes it easy to access credit, but I think for the benefit of some of us, just for us to be able to have it at the top of our minds, sometime in the future when somebody comes to meet us, we are also able to tell them this is why you should have a good credit score. Oh, you have 300. This is why you actually need to have 850. So can you just tell us why a good credit score is important?
In Nigeria, the country is moving to a credit-led state. So what that means is that you need to take your credit score seriously. And so how do you know, or the question is, why should we take our credit score important? And I would say for 2 or 3 major reasons. One, some employers and some landlords, funny enough, are beginning to check, yes, your credit history.
Yeah.
I remember the time that I wanted to rent a house in an estate, it was a bougie estate, and then they asked me for some important details. And then under the clause, they said, we would like to check your credit history.
I think they need to know that the person that they are
okay.
bringing
It's
as a
good.
tenant.
Yeah, so it's becoming more rampant
Mm.
right now in the country. So that's one. It's also important that employers, if you want to apply for a job, sometimes the financial institutions, majorly, they also check your credit history. So you see why you have to be good on your credit history. Then, if you want to enjoy the benefit of credit, if you don't have a credit score or if you're not credit worthy, we will not avail you the credit. So if you want a faster credit, if you want to expand on your business, if you want to be financially responsible, you need to have a good credit score.
Actually, that's quite a discovery. The fact that landlords are now asking for credit
I was shocked as well.
In fact, all right. Okay. Moving on. The next thing I want us to talk about, which first of all is because I am genuinely interested in what the credit bureau is all about and what exactly they are powering, where they come into play as far as matters of credit score, credit report is concerned. So my next question now is, what is the credit bureau? And I think there are probably quite a number of them out there. So what are the different types? And even if there are different ones, what differentiates a credit bureau from another?
Okay. So I would like to start first with what makes a credit bureau, and what makes a credit score. So what basically differentiates credit score and credit bureau?
Yeah.
So I would say credit bureau is a subset of a credit score. So it's not the same, but without a credit bureau history, or without us checking your credit history or the credit bureau service, we will not be able to determine your score.
Oh, okay.
Right? So you need the credit bureau to generate a credit score. Most companies also layer on the credit bureau. Right? There's a score on the credit bureau that is being allocated to you. But whereas some companies or some lenders or financial institutions, they also had 1 or 2 things to also buffer your credit score and say, this is my own credit score as a financial lender to you. But if you're talking about credit bureau, right? So I've established the fact that there are two things. There's credit score and then there's credit bureau. Credit bureau is a subset of credit score. So credit score is that 3-digit number that you see is available on your credit bureau, is also available by your lender. They can also provide it to you as well.
Okay.
But your credit bureau is, so when we say credit bureau, right, what we are saying is that detailed report, right, that you would generate when you go to a site. In Nigeria, there are a lot of credit bureau companies that we have. We have First Central, we have CRS, and we have CRC, right? They generate the same, not, I won't say the same, they generate the credit history, the loan repayment, the loan cycle, how you have behaved on your loan, they've generated for you. But there are different parameters to different, what makes them different sometimes is the details of the report. That's the details of the report. That's what makes them different, right? That's what differentiates each bureau from each other. Okay. But I would say that the three words that I mentioned, they try as much as possible to give you the optimal report from the three different lenders that you have. What will you see on credit bureau, right? What you will see is you will see the loans that you have taken. You will see your repayment history, whether you paid on time. You will see your report card. Let me put it that way. You will see your report card with your loans. So for instance, imagine that you have taken a loan with a financial institution, say 100K, and you're supposed to pay for 6 months. You'll see how you paid every single month on the credit bureau. That's what you will see on your credit bureau. But on your credit score, you only see that 3-digit number, 350, 400. So but they will use that history, that breakdown to generate an algorithm that will give you that number that you have.
Okay.
Is it a bit clearer, or should I explain further?
No, it's actually quite clear. But then I'm wondering, if someone hasn't taken a loan before, what would then form this financial behavior?
Okay. So if you've not taken a loan before, we consider you, or financial institutions sometimes consider you as high risk because you've not taken a loan before. So we have no history of how you would behave. So it is more like us taking a bet on you to behave well in your future endeavor. So what we would do is that there won't be any score for you because you've not taken a loan before from the credit history. But a financial institution can have an internal algorithm that they can use to profile you for lending.
So, okay, so what this means is maybe one of the steps that I can take as a person to have maybe an 850 might be to actually take a loan, but not just take a loan, to also pay, because
you
it's
have to take
also
the loan
my financial behavior.
Yes.
And pay back as and when due.
Okay,
all right. So it's not just to take a loan, it's actually to
you have to take a loan, pay back as and when due, and ensure that you don't borrow from several lenders or several financial institutions. You have to take the loan responsibly. Borrow from one person, ensure that it's something that you can pay back every single month, and then you pay for as long as you want to. But ensure that you pay back every single month, and you are paying back as at when due. If your due date is 27th, don't come and pay back on the 30th and think that you'll be good. You're already 3 days late. So those things are also things that impact your credit score as well.
Okay, yeah. It's been enlightening so far. So, which then takes me to the next question. Because, the first time you told me the first step is to know my credit score. Now, I want to know, and I want others as well to know as well, how do we check our credit score in Nigeria today?
So today, you can check your credit score through the licensed credit bureaus by the CBN. We have a lot of credit bureau we have a lot of credit bureau institutions, but I would mention 3. We have CRC, we have First Central, and then we also have CRS. So you can check from any of these platforms All you have to do is go to their website, put your details on their website and generate. That's one. The good news is that you are entitled to one, sorry.
Free check.
Exactly.
That's
Yes,
okay.
you are entitled to one free check.
I feel like I'm also an expert myself.
Yeah, that's good. When you are entitled to one free access, one free credit check for a year. So once you have that, once you register, you can pull that and then just see where you stand first
Okay.
as an individual to see what your score is. Because the higher your score, the better you are as an individual.
Okay. All right. So wait, you mentioned that we're entitled to one free. What happens when, like a report card? I want to see how I'm behaving let's say every quarter, for instance.
Oh.
Does it mean I have to pay, or what's
Yes.
supposed to happen?
So if you've used your one free access, for the subsequent ones, you have to pay for that as well.
Imagine somebody having to pay to check a credit score and the person ends up getting 300. So you're paying to check your failure. Oh my god! But
No.
I think it's still important to check anyway,
have to
so
check.
that you're
You
able
have to
to. Okay. All right. So now, if someone has 300, having checked, let's say the person checked their credit score and saw that they have 300, which is on the lower scale, what can they do to improve so that they don't remain at the bottom? You say, let them also get to the top. Like, how can they get to the top of their credit score?
So the question might look like something that is very bad, but it's actually not bad. It's not something that is worse, right? Rebuilding your credit score is something that you can, if you are intentional about it, you can fix it. Maximum 6 to 12 months, but it depends on how much exposure you have. But it's something that is fixable. So once you've seen that you have a bad credit score, right? The first thing you have to do is first check that it is not a wrong report, right? If it is not, a mistake that was made by some financial institutions, check first that this is correct. So if you are now see that it is correct, that you are truly
The owner of the bad
owner
score.
of the bad score, right? The next thing first is to check, what can I do? You have to ask yourself the simple question, how much do I earn, right? What's my monthly repayment? How much can I pay every single month? Then you go to your lender and they ask them that, is there a world where I can spread my repayment, or this is what I want to pay every month. Can you help me adjust or restructure or do my repayment in this format? You can negotiate
Oh, so it's negotiable.
for bad credit history.
Oh, okay, for bad.
Yeah,
Okay.
as call. So you can negotiate. So you tell them that, let's say for instance, you're supposed to pay 40K every month, but you say, I can pay 60K every month. What that does is that within a short period of time, it will take you out of the bad shape, and then it will put you on a journey to transition. But what is very important is that you are consistent with your payments. Because not that you pay 60K today, the next tomorrow you will not pay, next month you will not pay. It doesn't take you out of that space. So you have to negotiate that this is what I want to do, and then you start to pay consistently. Or you try and get full and final payment. Like what we call it full and final payment. You try and get a lump sum to just clear out your debt at once.
Okay.
It will not automatically take you out of your bad fix or your bad credit score, but over a period of time, you will start to build it again, and it will start to come back to 850, 800. But let us even take it to 600 or 400 first before we get to 850. Then after a while, so you can also try to go and say, but please, as you are building this your credit score, don't go and borrow money again from another lender. Please, it's very important that you do not do that. Because if you say you want to borrow from another lender to pay off another debt that is already going bad, you are just putting yourself in a fix. It's called credit bridging. You get to a period that you will choke, right?
And it's sad that there are quite a number of people that are like that. I want to know. I know of someone that was in that cycle for long, and it was really bad because she kept borrowing from one loan company to repay the other, and it was just a pretty terrible thing to be in. And I think what she later did was, I think thankfully she found maybe a family member or someone that was willing to give her a lump sum, and the person just paid off the entire money. So yeah, this is for people who like. And funny thing is, there are people that just delight in borrowing money. I don't know what we can say to people like that. It's not like they need the money, but the idea of just borrowing money because I can borrow and I will get it
because you have access to it.
Yeah, I think this kind
But
of
if you
people,
spoil your credit score, you have access to it for a few months. After a few months, you will not be able to use it anymore. So you have to be responsible with your borrowings. It's very important for you to be responsible with your borrowing. Borrow what you need. Don't borrow because it is there. Borrow exactly what you need. Because the more you borrow money, you pay back, you'll notice that your access to credit starts to increase. I can give you 50K today, you pay me back today. I can also borrow you more. I'll give you 60K tomorrow.
typically.
You increase your access to what you can get. But if I borrow you 60K and you don't pay me back that 60K,
you will not even see 20K next week because who are you?
So it limits what you can get over a period of time. So I would say borrow responsibly. Don't just borrow because you have access to it. Borrow responsibly.
Okay. I think we can just wrap it up with you just, maybe giving us highlights on how smart borrowing can come into place, how we can be smart borrowers, or how someone like me, I mentioned that I don't even know the state of my credit score. But then you said one of the reasons or one of the components of the credit score, or what a credit score measures, is if you've taken a loan in the past and how well you repaid. But there are some people that, as much as there are people who would actually love to borrow, there are also some people, and I'm speaking for myself, that would not want to borrow. I don't just want to borrow because that never. But I think there's what you have said just opened my mind to see that getting loan is not bad. It's actually one way to even build your credit score. But then I think can you just touch on smarter borrowing, and so that we can also learn about that.
Great. So based on your question, right? Smart borrowing means borrowing with strategy, right? As a credit person, I would say borrow responsibly, right? And know how to use credit. So what these three words means, or what I've been saying, is borrow what you can afford to pay,
Okay.
borrow what you need, and then borrow not for luxury spending. So that's a personal opinion I have. Borrow not for let the money that you're borrowing work for you. But luxury is also dependent on, it's specific to different people. Some things I call luxury might not be luxury to you, right?
True.
So you have to define.
I think it would say frivolities. Maybe because luxury, like you said, luxury is very relatable.
Yes, it's. I can say this is luxury to me, but to somebody else it is not luxury. So I would not want to use the word luxury. Just borrow what you can afford to repay. Borrow with a sense of responsibility. That this money that I'm borrowing, it is to yield a certain result. So those are the people that I've seen have fantastic credit reports, fantastic credit scores so far. Those that have those two major outputs, over time, they tend to know that I borrowed this money for this thing, I'm using it for this result, I want to use it to drive this engagement. They have what they are using the money to do. They're not just collecting the money and then they're not looking, I have money now in my bank account. Okay. Yeah, there's this thing that I want to use. Then also, apart from that side, when you are borrowing, read the terms and conditions, know your loan purpose, check that your agreement, you understand what is there. Read it, understand what is there. Ask questions if you want to. Ask questions. So say, I need the money urgently, so I couldn't ask. I said, God, ask questions. Ask for the hidden charges. Ask for the excess payment. If I want to liquidate, what am I? You ask questions that, okay, so you understand what you are getting yourself into. So that's what I would say is called smart borrowing.
Yeah. Actually, I'm even going to circle back to terms and conditions, and that's because I know a lot of people a lot of people do not read terms and conditions, and then things begin to happen, and then you're wondering, nobody told me this. But by the time you go to the credit institution or the loan company, they tell you this is in the terms and condition, and then you begin to say, no, you did me dirty, and all of that. So it's very important that beyond asking questions, because some of all these things are actually obviously written in terms and conditions, but many of us just we just tend to flip and say that one is not for me. Terms and conditions, no. But I think it's very important that we read terms and conditions so that it's guides us and helps us to know what we are getting into. And there's something that was dropped in my heart when you were talking about borrowing strategically and all. And then I remember that someone had mentioned that the rich people of the world, they also borrow money, and then I think that is like the height of strategic borrowing for me, because the rich people are borrowing money to invest, to do big things, actually to even make more money. And then I'm like, okay, I think that's a level to aspire to.
Yes.
That's borrowing money not just because I want to improve my credit score, but because I want to do something better with the credit, especially as, like you said, we are evolving towards a credit-led economy. I think it's been a very beautiful session, and so before we leave, we have a free resource that is available online today. So as you watch this podcast, I would encourage you to get the free resource. Just download it on our website. It's all about credits. It's a smart borrowing guide that would help sum up all we've said today and also make you a better borrower as we go along. So thank you for coming to the podcast today. It was nice having you.
Thank you.
And thank you everyone for watching. Till the next time, we say bye.